Literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What is going on, everybody? It's your boy, Reckless Ray Dinero, and we are back at it again with another episode of Future Financial Strategies. It's going to be a special one. I like to filter in some crypto talk over onto this line of thought process because obviously Future Financial Strategies, crypto is pretty much the most bleeding edge future financial strategy there is. I have a channel where we're tracking my cryptocurrency, or not a channel, video stream, a playlist that you guys can tap in where we're doing updates on my crypto portfolio called Crypto Portfolio Updates. That said, crypto is a future financial strategy for me. I have a Bitcoin standard that I've implemented within my personal financial strategy within my household. It is a key essential part of my wealth plan. It is the majority of my net worth. It is something that I'm constantly dabbling in. I'm constantly trying to figure out. You gotta stay evergreen because technology moves fast. We want to give a shout out. Speaking of which, how do you track your crypto? How are you tracking your transactions? I've got two things that I use, but the main one is Delta Investment Tracker app. It's what I've got in my phone. I keep my live updates on that. I've got a link down in the description. If you have not given it a shot, definitely give them a shout. Give them a look-see. Give them a try. It tracks both your crypto and your traditional financial portfolios now. You can just link them in. It's super easy. Should you do that? Me personally, with my crypto, I'm a manual entry person, but my TradFi accounts are linked over there so I can get a glimpse at what's going on. So I can get feedback on the positions that I'm making, the moves that I'm making. Back into it, though. So this episode, I wanted to have a conversation because it's a conversation that I hadn't really thought of, that got put into my purview. And once I heard it, I went, a lot of the times when I'm debating with people, I am blurring these lines myself. And a lot of those of us in crypto do blur these lines. And you can actually disseminate this down to specific projects because I see people do it on specific projects all the time as well. And that's the reason I named this episode Bitcoin is an investment and a philosophy. It's both. And I'm going to explain how it's both. We'll start off with the investment because that's the easy side. Bitcoin's the best performing asset that's ever been created in the past 14, 15 years. Period. The numbers do not lie. Have other assets done better within small windows of time? Sure, within small windows of time. But if you take the entirety of it, if you take any 5-year block of it, any 4-year block of it, once you start extrapolating out, it is the best performing asset that's ever been created since its inception. Now, that's just math. Now, if you look at Bitcoin right now, actually, hold on. Let me look at Bitcoin right now, because even right now, I mean, you could say that NVIDIA is better, but that's right now. That's not over the whole of it. Let's take a look here. So Bitcoin over the past year is up 124%. Year to date, 124%. Now, if you get down into under that, you start having some conversations, but it's up 124%. Let me take a look at NVIDIA while we're sitting here. Let's see here. Let's take a look, take a look, take a look. Where's the performance? Hold on a second. NVIDIA stock. That's let's see here. Is this going to give us the performance? Stock. Where's the Okay, hold up a second. This isn't giving me what I need. Trading view. Let's go to trading view. Hold on a second, folks. We're looking it up because I just want to give accurate numbers because I would say that probably the one thing that everybody's going to oh, there we go. Perfect. Year to date. Let's see. This isn't giving me what I want to see. Oh my goodness. This is leave. Okay. Oh my God. Hold on. Oh, there we go. Year to date. Okay, so year to date, NVIDIA is up 147.25%. So NVIDIA is beating it for year to date. Let's go to max. Okay, so we're going to go max chart on both of these. Hold on a second. Let's do this. Do this. Do this. Okay, so let's max chart both of these. Let's see. Does this give us a different window? All. Yeah. So we're looking at yeah, see, they're not get. Oh my goodness, I need to find somewhere that has an accurate all. So we're looking at, like, if you look at the all on both, like the longest distance chart that you can go on, NVIDIA is not beating Bitcoin and all. Now in the 1 year, absolutely. Let's look at 5 year. Let's see what we got. 5 year. So you're catching the pump on NVIDIA. NVIDIA is actually similarly comparable, but it doesn't have 15 years of data isn't there. So like obviously on different timelines, it's also comparing apples to oranges because NVIDIA is not a currency. NVIDIA isn't being bought up by governments or institutions. It's being bought up actually by institutions, not so much by government. It's a company. It's a publicly traded company. It's not a currency. So it's still an apples and oranges comparison. If you leave the United States, you're gonna have a really hard time crossing borders with your Nvidia stock. I mean, obviously you can go through the rigmarole of swapping it into different portfolios, but you're gonna have to cash out and do all sorts of crazy stuff. You can't just load it up onto a thumb drive and leave. Obviously, if the country that Nvidia is housed in completely collapses, you have issues and risks there. There is no issue or risk with that with Bitcoin. They're different things, but something that's performed better than Bitcoin during a window of time. We can go with Nvidia, and like we can have that discussion by numbers, but it's like, how did they do two different things? They serve two different purposes, because you can't go trade or sell your Nvidia stock directly for anything. You'd have to cash it out into cash and then get it, which for some things you still have to do that with Bitcoin, but also it's more fluid. Like I can have cash instantly with Bitcoin. Like right now, 24 hours a day at any point in time. You want to make a purchase on the weekend and you got to cash out your Nvidia stock to do it? You can't, because the stock market's not open. You can't convert that to cash on the weekend, on Saturday, on Sunday, after hours, after the stock market is closed. Which, fun fact, the stock market is closed more hours than it's open during the week. During any given week, it's closed more hours than it's open. So you got a window of time where you can make all your moves as a retail trader, which is most of us. So numbers wise, best investment ever created, Bitcoin. That's just numbers. It's just, okay, well, did you get these gains? Like if you've been in Bitcoin for over 4 years, you're in profit. Enough said. So that's enough said on that. From the investment standpoint, it's literally becomes math. And we can't argue math. You can have whatever feelings you want. You can't argue math. Now, what makes it frustrating is when you have your Richard Faines, or back in the day when Anton Daniels used to talk about it, your gurus, your financial gurus, and they all poo-pooed on it. Because at the end of the day, they all want you working until you're 65. They're part of the system. Once you get into the, like, they say that there's a go along to get along gang within the Black community. There's a go along to get along gang within these financial communities, because there's certain people that get put on, and then those of us who are telling the truth and telling you how it is and building as we're building, getting it out the mud with you, on the march with you, in the muck with you. Nobody wants to listen to us, and our channels don't get traction. That's just what it is. Not to say that it matters, because we're just documenting the journey over here, but it's something that I've noticed. Is like there's a cabal, there are gatekeepers, and these people, even though they say they don't like gatekeepers because there's certain levels to this where some of them are way bigger than other ones, and then other ones are just super big and the other ones are super duper big, they all gatekeep. And they gatekeep their narrative because they don't want to have honest conversation. It's just get on here, give your spiel about it. We don't talk math. We don't talk anything specific. It's just, I'm saying this random prescription because I'm speaking to the lowest common denominator, because you have a large platform and you just leave it out there and leave it at that. And then if you're challenged, it becomes, oh, well, I'm richer than you, so I just got to be right. That's not how math works. It just isn't. What happens is, the reality of it is, they can get a 3% return. 3% on $1 million is still a lot of money to people. If you're a millionaire already, then like, yeah, you can scale down to where you're getting 3-4%, and like that's a good year. Like that's a real good year for most of them. Let's talk about it. Let's do the math, because we like to have math and receipts over here. So if you're doing $1 million times 0.03, that's $30,000. You make $30,000 that year. Now, could you live off $30,000? Depending on where you live, sure. But the point is, now you're adding that to the million, and then the next year you got $1,030,000, and then you get to stack that on there, and that's going to keep going up. So low percentage numbers and really safe, conservative. This isn't going to be life-changing, incremental. It's life-changing for them, because once you have $1 million and you're stacking $30,000 into the pool a year, that's different. That hits different than having $10,000 and like needing to get to $1 million, because $10,000 getting the same 3% that a millionaire is, for a point of reference, is $300. That's, bro, I don't roll over for that after being in crypto. Like $300 is not entertaining to me in any sense, especially if it's over a year. That actually breaks down to, that actually breaks down to $25 a month. Like, people can turn their nose up at that. Now, in the grand scheme of things, does it compounding that matter? Absolutely. But to somebody who's trying to not work until they're 70 or 65, 3% is, that ain't cutting it. That is not cutting. If you're just getting 3% a year, you're not even beating inflation now. But seeing that $30,000 stack versus the $300,000 stack, it hits different. So they can give you, because like I said, once you're at a mountaintop, stuff hits different, because even doing poorly by anybody else's metrics to a normal person, you're doing real well, because $30,000 is a lot of money. $30,000 is a lot of money to me. That would matter. I'm not in a position to where I have $1 million portfolio where I can just eke by on 3%. So as we're building here, and as you're having these conversations with people who are boots on the ground, still in the workforce, still having to grind it out at the lower level, who aren't millionaires, who aren't deca millionaires, who don't sit up here with Gucci glasses and robes, or aren't sitting in their, could be rented, could be a spec home space that has nothing as sparsely loaded in it, space to tell you about stock markets and what they're doing, which is basically the stuff that any poorly trained financial advisor would tell you, Richard. They're giving you these safe bets because for them, you don't have to be diametrically right or wrong. That's the first thing. They get to have the little air of like, I can defend myself on this. When Nvidia goes down, obviously buying opportunity. I'm a fan of Nvidia. I'm getting in on the buying opportunity for Nvidia, but you get to tell people stuff. We're talking it up during the bull run, and this is what everybody does. When the price goes up, everyone's on board. Everybody's piling in. I told you so. I told you so. I told you so. They're not telling you what to do when the price goes down. They're not here when the price goes down. And this is where I kick over to the philosophical side of Bitcoin, which is, it's part of the reason that when people talk about the cryptocurrency space, we all get viscerally. And you see it with Bitcoin because Bitcoin was number one. It was the first coin. It was the first entrance into this market. It's the one that, it's the gold of crypto. It's the replacement for gold. It's digital gold. The philosophy behind it, though, is we're removing the middlemen. We're removing these gatekeepers. We're removing the Anton Daniels. We're removing the Richard Faines. We're removing the Earn Your Leisure. We're removing all of these clubs that you have to get in to be a part of these markets. These people who get to tell you from the mountaintop to go get 3% so that you have to work till you're 65, even though they don't have to work till they're 65. It's removing all middlemen. You don't have to go get permission to have an account. No one tells you what you can or can't invest in. No one tells you what you're too stupid to do with your money, but you can go get into college debt that never goes away to get a degree and get indoctrinated into some beliefs that probably aren't pro the country that you live in. You get to go get into indefinite house debt. You get to go lose a house. You get to go have that debt levied on you. You can do so many other things that maybe if they were worried about you get to go gamble until you're in debt up to your eyeballs, until you have nothing, until you have a gambling addiction. There's so many things that you can go do that you don't require a middleman, because it doesn't set you on a path to freedom necessarily, or it's a tool that could set you on a path to freedom, but you could also, and a lot of people do, get in over your head and mess it up. But crypto, which is global, which is you can pack your wealth up and leave. You can move to a different court on the field and still have something that's trustless, that doesn't look at your race, that doesn't look at any of your little victim tokens that we all like to talk about. that doesn't acknowledge any of that because it can't see you. It's just numbers on a screen and you can't tell what race, color, creed, sexual orientation, or anything those numbers on the screen are. It's just people transacting freely, voluntarily. That we're too stupid to be able to do on our own. And then you have your gurus like Richard Fain talking about how it's a scam and it's just going to pop because he's old and he came from a different time period. And I understand talking from what you know, but speaking into a space that you are ignorant of is beyond crazy, especially considering the math is not on your side. And then for him to tell because I listen to Richard Fain's lives because, as far as some like boring, basic financial information, dude, he's solid. He's got great information for boomers. Not boomers that haven't made it to where he's at, but boomers in general, they like that stuff. It's cuddly, it's warm, it's easy, it's simple. But to hear him talk about crypto and then lump Bitcoin in when he bought meme coins, which he himself advocates to not do within his market that he is informed of. He says, don't go buy penny stocks. Don't go start trading penny stocks. But he went in and started immediately trading penny cryptos, which are even more volatile than penny stocks. And then is speaking with some reverence of authority about what an asset that literally has outperformed every single holding he has, with the exception of NVIDIA within the last 5 years. I'll give him that one. But he ain't been talking about NVIDIA for 5 years. He's been talking about NVIDIA for 1 year, which he's also still right within that window. See how long that train lasts. But to see him talk about Bitcoin and make direct correlations to meme coins that have no use, he never wants to acknowledge what's actually going on in the space in regards to Bitcoin. Then yeah, from the philosophical side of things, oh yeah, we're going at your neck, bruh. We're coming for you. And we're gonna make sure to make you look as dumb as possible, because what you are saying is literally as dumb as possible, because you came into this space in the most ignorant fashion possible, which I'm not holding it against you, because when I came into the space before there were pictures of dogs on a token, which, let's talk about this, old man. Pictures of dogs on a token. And that was your entry into crypto. You thought that was a solid long-term investment? Stupid. Like, come on, bro. Let's talk about it. But when I came into the space, the exact same way. Most people come into this space the exact same way. The difference is, when I got my little hand swatted, I took the time to learn about the space and actually learn what was going on and actually learn what were valued projects, learn how this space worked, learn the importance of not having middlemen, because Richard will sit over there and tell you it's us versus them, when honestly, he is them also. He is in the top 1% of this nation. He is one of them. He's not down here with us. He is definitely not us. Man's a multimillionaire. Got mansions and stuff, allegedly, because I mean, we don't know within these YouTube spaces. And obviously I understand the social proof is how you get people to start listening to you. But on that same note, you bought a picture of a dog on a coin and thought that was the play. So I don't know. Like, I don't know what rational logic someone who's been in finance for a long period of time, apparently, as you have, would go, I'm going to go get into this new space on the bleeding edge of technology. Let's go buy the dog coin. The math doesn't math on that for somebody who's logical and is looking at things from an investment perspective, especially when during the time that you were buying that dog coin, countries were buying Bitcoin. Institutions were getting ready to start touching on Bitcoin. Publicly traded companies that are outperforming every, because you could have bought MicroStrategy too, Mr. Fain. Every holding that you have in your portfolio, we're buying Bitcoin, but you wanted to buy the dog coin. So I mean, I don't know. I don't know how to shake that out, but from the philosophical space, That's the reason when I look at these people who poo-poo on this space, and I'm like, cool, you got your lane. Like, if you don't know about something, just say that. But don't go in and get your hand swatted when you went in the most ignorant fashion possible, and then lump all of it together, even though certain things are going on in certain parts of the space that are definitely not playing out in other parts of the space, and they're navigating on very different levels. And you can't even seem to acknowledge that because you're in your emotions, because you lost money, because you did something stupid of your own volition that you were allowed to do. These people are middlemen. They want to talk down on an obviously smaller channel. I'm just documenting over here, but I'm calling stuff like I see it. I'm not in this space to make friends. I'm not in this space to make a boatload of money. I enjoy recording these because this helps me build my war chest. It helps me solidify my thoughts. It helps me work on my portfolios, which we're showing them building out. We getting paid either way. So I don't have to try to ingratiate myself. Now, I would love to have the conversation. I'd love to have the debate in regards to this specific topic. Because when we're talking finance, it is math. It is numbers. There should be no feelings on this. And it should also be acknowledged that the further you are up that mountain, the less you understand. Like, I understand, oh, I was there a decade ago. That's a decade ago. The financial space 5 years ago is different than now. When I first bought my first property, at the beginning of the lockdowns, that was a completely different space than where we're sitting right now. Like, honestly, the move that I made then, I don't know. I mean, I would be able to make it now, but like the ability for me to invest the way that I'm investing and the financial opportunities it opened for me would not be present right now. But there's still a mathematical conversation on whether it would have been more advantageous for me to rent and what that rent would have looked like. Because if I would have still been renting, I might have been locked into indefinitely renting because of the way the rental rates are going up. And I know that there's people who are like myself, like Anton Daniels, who apparently he doesn't raise his rent either. I haven't raised mine for my roommates, period, since we started, because I got exactly what I needed out of it. And it allows me to invest the way that I want and make some of the other moves that I want financially. It's not about taxing and juicing the mess out of people to get where I need. So I understand that philosophy, but unfortunately in my area where I live, it's all management companies. It's all management companies, and a lot of these properties are owned from people who aren't even in this country or don't live in this state. So they don't care. Your rent is indefinitely going up in this area. Always. Every year. Like clockwork. They're maximizing those profits because these are companies, corporations, external entities, people who don't live in the state they have no attachment to the area that we are in. And they're milking it for all that it's worth. So I don't know that I would even be in a position where I could save up enough with the way that they jack the rents up over the lockdowns to do what I'm doing now. So I can't go sit with somebody and say, yo, like, this is what you should do. House hacking, I'm 100% advocate for that. And I understand it gets poo-pooed on. I don't care. I have more money and more net worth than you. I have more free cash flow than most people and more net worth than most people, regardless of race. Because that's the game that I want to play. And I want to play to win. And I'm positioning myself to win that game. This isn't about looking good for people on social media or people who don't live in my house. It's about setting myself up and the people that I've taken under my covering to be in the best position whenever they're ready to be able to do something, and extracting every amount of resource or that I could, because we're paying under market here for rent because of when I got in and the moves that I made while I had the house. But those are decisions. It comes down to that. And like, if we're talking math, like, let's talk math. I love having those types of conversations. But if it's a conversation of I've got more money than you that I made multiple decades ago, then it's an apples and oranges comparison, unless we're talking strictly principle, but most of these people on their shows are not talking principle. They're talking down to you as though they know what your situation is, and there ain't no way they could, especially if you're not in these financial markets as a not rich person right now. Trying to get rich right now is different. The space that we're in is different. They done taken away all the cheap money from most of you. And most of you aren't in position to get it. Because they keep telling you that credit don't matter. That you got to pay for everything cash. And you're saving up and stuff's going up 20-something% a year. Good luck with that. Again, math. It's getting in position. Time value of money. But, you know, those are conversations that aren't had because it doesn't get likes. People don't like to hear that you got to just make a 10-year plan. And kudos to Anton because he does talk long term. But the thought process on long term is basically most of you are working until retirement. Now, me personally, I'm here. We're trying to be at minimum, the first level for us is getting to work optional. Because once you get to that work optional point, you can stay in the workforce for another year or two, compound that out. And now you're just upgrading lifestyle at that point, because now you got a machine with what we're building over here in the Wolfpack. You've got a machine that is generating income that you can just go, cool. Once we hit the work optional part, then it's a decision on, do you still want to do this? How much longer do you need to do this at this level to make it so that you don't have to like my goal is to build my portfolio out to where it doesn't make financial sense to even show up. That's what I'm looking to do. Or be able to have a little bit more leverage on my time. Honestly, that's all I'm going after, because I don't want to not work, but I have some stuff that I want to build. I have some shots I want to take. And to be able to afford to take those hits where it's like you can go start a business, and if it fails, my core income, I am a financial strategist. That's what I do. I'm a portfolio manager. That's what I do. Now, as long as we got that solidified, I can go try and do some other stuff. And if I fail, I can afford it, because I'm managing a portfolio where I've got income coming in. I'm not going to have to be obligated to 9 to 5, just be sitting there day trading the market. I'm also not going to have to cannibalize the other portions of my portfolio, because the way that we're doing the portfolio over here in the Wolfpack is we're focusing on having a portfolio that generates income. So that way you can go build up underlying assets that maybe when you get too old to manage it, you can start eating off of a little bit before you expire. But the premise of building up a portfolio and then slowly eating off of it and hoping that prices don't dip, or dude, that doesn't seem efficient in this market the way that it is right now. We're gonna do income. We're gonna buy assets. That way, as we bounce around, we can use that income to buy assets in other places. We're gonna diversify via country, and we'll have our core here because we're building here. And that's the way that we're going to do it. But the philosophy of that, back to the philosophy on Bitcoin, is it's about cutting out middlemen. It's about cutting out gatekeepers. There are a lot of gatekeepers in these financial spaces. A lot of them make a lot of money giving you half truths, making you believe that you need them. You don't need me. At the end of the day, 90% of the stuff that I'm saying is just buy and hold Bitcoin. You don't need me. If your financial advisor hasn't outperformed Bitcoin, you don't need them either, because you could have just bought Bitcoin. These are the facts. The strategies that we're implementing on Future Financial Strategies is to get you in a position to where you can hopefully at some point implement a Bitcoin standard or some sort of financial standard where you're consistently stocking that money away for the future in something that is rapidly appreciating and crushing inflation so that you can buy more. As I save in Bitcoin, the price of housing has gone down in Bitcoin. It's gone up in everything else. The stock market has gone up not because necessarily the stock prices are going up in value. It's going up because the dollar's going down in value. Bitcoin, on the other hand, if you like, for as long as I've been in this space, hold on, let me see if I can find this. I'll share this one with you guys on a leaving note. Okay, yeah, we're going to share this. Let me pull this up for you because I want you guys to see this. I'm going to make myself super small so that way we can get this in here. Let me see if I can. Make this bigger. Oh, yeah, there we go. Now, orange line is Bitcoin. Blue line are dollars. So back in 2014, it was 192 Bitcoin, more or less, to buy a house. And then it went up. So hold on, let's look at this. So in dollars, it was average house was $159,870. Then Bitcoin spiked and it went up to 738.97. So we're going to say 739 Bitcoin to buy a house. That's in 2015. Spiked up. Then what happened? We took a massive drop to 12 Bitcoin, 12.851 Bitcoin to buy a house. Now think about that. That means from 2015 to 2018, we went from 738 Bitcoin to buy a house to 12.851 Bitcoin to buy a house. Now, let's see here. 2015. Let's see if we can find that same window. Yep, there we go. When it was spiked up, $175,138 to buy a house in dollars. Now, going up to 2018, $196,900 to buy a house. Interesting. Then we had a little jump back up. It jumped back up to 54 Bitcoin, 54.425 Bitcoin to buy a house. Going straight down. We're basically at 207. So the dollar's going up consistently. It's costing you more dollars to buy a house and less Bitcoin to buy a house. Then we hit an inflection point. 2020, it's $234,371 to buy a house. It is 21.859 Bitcoin to buy a house. See how this is working here, people? And then after this inflection point in 2020, remember, shutdowns. How has the dollar performed? Well, now it's $323,000, $323,478 to buy a house. It is 5.325 Bitcoin to buy a house right now. We're going down. The dollar is going up, and this isn't the dollar. It's not going to go backwards unless there's some massive housing crash. But this entire time that we were facing that quote unquote non-inflation over COVID, this non-recession over COVID, look at how much more expensive houses are now. Look how much more expensive from 2020 to now. 2020 to now, 234. It's over 5 years. Almost $100,000 more to buy an average house in America. That's the reason I have a Bitcoin standard, because stuff gets cheaper. Everything gets cheaper in Bitcoin. So if I'm looking at what I'm going to need in retirement, I'd rather have something that's going to make things so inexpensive for me that if I gotta chisel off something, and chisel off that, because as time goes on over the longer stretches of time, I'm going to continue to get more and more value out of my Bitcoin than I am out of the dollar, because the dollar is crashing. Like I said, I've said this before. The dollar has lost 99% of its value against Bitcoin since its inception. Things are priced in dollars. So that means everything is getting less expensive in Bitcoin over long periods of time. And once you understand that, coupled with the trustless nature of Bitcoin in and of itself, the fact that there's not supposed to be a gatekeeper between you and your Bitcoin, the corruption of our financial systems, all of them. I mean, I'll pull the chart back up. Look at the chart. If they're telling you to save in dollars, your emergency fund's supposed to be in dollars. Why? How does that make sense to just have over, in my opinion, over $2,000 sitting in the bank? If the blue line is what dollars is doing, why would you have $60,000 in the bank unless you're dumb? Why would you have honestly, over $2,000 in the bank is stupid to me. In case of an emergency, I can get my Bitcoin within minutes. I can convert it to a card that I can make a purchase on. Minutes. Why is the emergency fund in dollars? Aside from that's just what we were told to do. But look at what the dollar's doing. Everything's getting more expensive. If houses have gone up this much, look at your medical bills. I've recently had a surgery. It is expensive. Why? Why would we have these in dollars? That's the reason, as much of I'm an advocate for the HSA, but I'm in market pegged HSA at minimum, because at least then, as this goes up, your portfolio that it's tied to is going up as well. A lot of people, like the way that this is set up and the way that these games are set up, a lot of people are set up for catastrophic failure. We're seeing all the boomers who followed the 401k system, and apparently the fees in there are so ridiculous, they're not even able to retire. They're having to work longer because stuff is getting more expensive, period. Lifestyle creep. Bunch of other stuff. I'm not saying don't have your lifestyle, but plan accordingly for your lifestyle that you want. And I would say not only plan accordingly with the cushion. That's where I'm at. You got to have the lifestyle plus the cushion, because that way, if you don't use it, you can reinvest. You can keep that pot growing, because like it has to grow. It has to keep up with inflation, and it has to grow. The foundation of what we're building over here in the wolf pack is income. That doesn't mean that we're just going to continue and indefinitely just do income. Like, it's not. Like, there's going to be long-term holdings. There's a Bitcoin standard ascribed to all of our dividend income, to where a portion of that's going into Bitcoin as well, because we're stocking away for later. We've got to do better, people. We got to do better. Again, if you liked the video, if you tapped in for this long, let's talk about it. Because, and the thing that I wanted to put on to stamp onto this is, especially when it comes to getting into debates with people in reality or on these online panels, when it comes to talking about crypto or finance in general, understand if you're coming from the investment standpoint or the philosophy side of the standpoint, because especially with Bitcoin, those two lines blend. There's a very large gray area where you're on both sides of that. And if you're talking philosophy to the investment, then you and the person that you're debating with are talking past each other, and that's not going to be a fruitful conversation. So you got to be able to reframe it to where they're coming from as well, to battle the points effectively. But definitely click that like, share, and subscribe. I hope you guys got value from this. That's the only reason I make these videos, aside from documenting the journey, is to hopefully spark some thoughts, spark some conversation with those of you who are following along in my journey as we build our way up to that first marker. Because like our goal for this year was to hit $250,000 in net worth. We are flirting. We're in the realm. The stretch goal was $300,000 in net worth, and it honestly just depends on what Bitcoin does for the end of the year. We'll see where we're sitting towards the end of the year, but like we're getting there. We are getting there. We're trucking along steadily. Till next week, people, it's been Future Financial Strategies. This is your host, Reckless Ray De Niro. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.